Welcome to the Access to Capital for Mariculture Businesses webinar series. The series is being hosted by Alaska Sea Grant in partnership with the Kodiak Archipelago Leadership Institute. My name is Missy Good, and I am the Mariculture Specialist for Alaska Sea Grant, and I'm coming to you from Kodiak. This webinar series is meant for mariculture farmers, nursery and hatchery operators, and processors in Alaska on accessing capital for starting and expanding mariculture operations. This series focuses on mariculture business development programs and resources, including grants and low interest loans. This is a series, and so we're hosting a different agency once a month throughout the winter. And today we're going to hear from the USDA Farm Service Agency on the Farm Service Agency Loan Fund. Our next webinar is going to be January 12th, so go ahead and check out our website, alaskaseagrant.org, and go to the events page to register for that one as well. And with that, I'm going to hand it off to Erin, and she will introduce herself and tell us all about the Farm Service Agency Loan Fund.
Good morning. As Missy said, my name is Erin Sturdivant. I'm with the Farm Service Agency here in Alaska. My office is located in the Palmer Service Center. And I will go ahead and share my screen so we can get started. And if you have any questions, we can probably do some interruptions. If not, there I think is plenty of time at the end to answer a bunch of questions. My contact information will also be at the end, so you can contact me afterwards. Okay, can you see my screen?
Yep, we can see it.
Okay, perfect. Okay. So, Farm Service Agency is one of our agencies under the USDA umbrella. So I'll give you an overview on our farm loan program. Not only does FSA offer farm loans, but we also have farm programs. So I'll just do a really quick rundown of some of those main categories. Maybe not all pertaining to mariculture, but we will. If you have any questions on these, certainly feel free to contact me afterwards. We do have some disaster assistance programs, some safety net programs, conservation programs, and risk management programs. Our farm loan program main categories are farm ownership, farm operating, we have a micro loan program, and also loan guarantee program. So we are a lender of first opportunity. We are designed to help farmers start, purchase, or expand their farming operation when they can't obtain commercial credit. Our loan officers are available to answer your questions and to help with the application process. We have targeted funding for different categories of producers, including beginning, underserved, minority and women, farmers and ranchers. Some eligibility and supervised credit are the big eligibility criteria that we look at initially in a loan application. So FSA, we are supervised credit. So this is definitely different from any traditional credit that you would get from a commercial lender. FSA is the lender of first opportunity. So for those who may not otherwise qualify for ag credit, FSA comes in and steps in and helps fill that gap for financing. FSA makes and services direct loans through our supervised credit with funds from the U.S. Treasury. FSA also offers loan guarantees for loans made by those conventional commercial lenders. So those commercial lenders are actually coming to FSA for that guarantee, whereas the producers would actually go and apply with those conventional commercial lenders. Direct and guaranteed applications. You must be unable to obtain sufficient credit elsewhere. You have to be a citizen or legal resident alien, possess legal capacity to incur, or possess the legal capacity to incur the loan obligation, and have acceptable credit history. We're not necessarily basing anything off of your credit score, but definitely looking at making sure that you have been recently catching up on those loan payments or making regular payments, don't have anything, looking at things that are within the borrower's control. We understand that there are things that are outside of the borrower's control. Be an owner operator or tenant operator of a family farm. Some other general eligibility requirements. You cannot be delinquent on any federal debt. Have a managerial ability for the type of loan assistance that you're requesting. You may not have caused the agency a loss by receiving debt forgiveness. There are some exceptions to that. Not having been convicted of planting, cultivating, growing, producing, harvesting, or storing a controlled substance within the last 5 years. So our direct loan applicants, you must develop as part of your application process. You need to develop a realistic farm business plan. It projects the repayment ability for the loan that you're requesting and also meeting the general eligibility criteria. You'll have to provide adequate collateral for the loan. You're agreeing to take borrower training courses if required and graduate to private sector credit when able to do so. So some of our loan programs, for instance, the operating loan program, you're limited at using that for 7 years. So we're hoping over the course of that time or sooner that you're able to graduate on outside of our supervised credit with FSA into a commercial lender lending environment. Not to exceed any restrictions on years of eligibility. So that kind of goes back to the example I just gave is the 7 years, which is under the farm operating loan. Have applicable education, training, or farm experience that provides reasonable prospects of success. So for our farm ownership loan, you must have participated or have managerial experience of a farm or ranch for at least 3 years. There are a few different things that we can substitute in there for one of those years, which includes perhaps an ag degree, military experience, or having a mentor. So all of these things, you're going to work with your loan officer and they're going to ask questions. You're going to have a nice conversation, finding out about your background, getting information on these things for us as FSA loan officers to determine your eligibility. FSA is supervised credit. So the goal is to graduate to commercial lending. 5 C's of credit is our character, capital, collateral, conditions, and capacity. Know your credit score, your credit report, cash flow, and your farm finances. And we want you to have a plan for success, for repayment, not only for us, but for you, and to build on your business moving forward, not only maybe to graduate to commercial lending, but maybe moving into a environment where you're not using credit from lenders. Our FSA farm loan programs. So we have a direct loan program, a guaranteed loan program. There's also a beginning farmer down payment loan. So the direct loan program is you're actually working directly with FSA on obtaining credit. The guaranteed loan program, you're working with commercial lender in obtaining lending or financing from them. They are coming to FSA. You wouldn't necessarily be working with FSA, but that lender will come to FSA for a guarantee, which helps reduce rates for you as the producer or the borrower. Currently, our farm ownership operating microloan program rates for December. Kind of here is a idea right here. So our farm ownership loan currently is 5%. Our operating loan is 5.125%. There's several acronyms on this page. FO is farm ownership, OL is operating loan. I should have written that out in full wording, but FSA or government, we're full of acronyms. So loan types and the limits. So currently our operating loan limit is 400,000. Our farm ownership limit is 600,000. The microloan program is limited at 50,000. You can use 50,000 under the farm ownership and 50,000 under the operating loan. That also includes what your current direct balance already may be with FSA. So if you currently already have loans with us, then that loan plus a new loan request would equal over 50,000, then it's not a microloan application. As far as our guaranteed loan program, this lending limit is updated annually. So for 2023, I think fiscal year, it was just updated to $2,037,000. The down payment loan program. So the down payment program is you work with a commercial lender or another lender and work on the big chunk of commercial lending or getting the big portion of that financed. So you would come to us then for the lesser of 45% of that purchase price or 45% of the appraised value or a maximum of $667,000. Okay. Operating loans. So operating loans can be used for several different things. I know the examples on here don't necessarily match up with agriculture, but we'll kind of spin it so they do. Equipment, livestock, or purchase of your seed, production expenses, or refinancing some of your operating expenses that you may have incurred through the year. Our operating loans can be repaid on a 1 to 7 year term, depending on the useful life or what those expenses were that you were requesting the loan for, and the limit is $400,000. Farm ownership. So ownership loans can be used for land purchases, capital improvements, conservation, and loan closing and other related expenses can be combined all into that farm ownership loan request. Farm ownership loans can be termed out up to 40 years. It all is going to depend on what the loan request was for. If it was for some type of capital improvement and maybe the useful life of that is not 40 years, then we would reduce that term limit down close to what the useful life is. The limit on our farm ownership loan is $600,000. Microloans are limited to $50,000, and it has a simpler application process. So we're hoping for less paperwork. It can be used for both the farm ownership and our operating microloans. Operating microloans can be used for all approved operating expenses authorized by FSA, such as your initial startup expenses, seed, and traditional farming would be for fertilizer, marketing, purchase of livestock, mariculture-wise, purchase of your seed, like your oyster seed, any of your operating expenses, startup expenses, marketing, etc. Ownership loans can be used for approved expenses such as purchasing, maybe I guess I'll move back a little bit to the operating. Your annual expenses can go in there. If you have an annual lease on water, your site location, that can be used in an operating loan as well. So farm ownership, if you're purchasing a site, goes along with your water, that can be used for this. If you're constructing any type of building or enlarging your current operation, that could possibly go under the farm ownership loan portion. Experience requirements have been modified to accommodate applicants. Small business management and military experience can count towards management requirements for our farm ownership loans. But also working with a mentor can help modify or add in some adequacy to that. If you're a new beginning farmer and we feel like this is a great opportunity, everything cash flows, we feel maybe like you might need a mentor maybe to kind of work out some of those kinks in the first few years of your startup operation, then we would leave it up to you or you finding or maybe helping you find a mentor to work through those first couple of years. Our operating loans for the microloan program repayment terms are 1 to 7 years, and farm ownership is up to only 25 years. Our guaranteed loan program. So guaranteed loans are made and serviced by agricultural lenders. So Farm Credit Services of America, Northwest Farm Credit, perhaps some of your local lenders, banks or credit unions where your operation is currently located. Maybe you work with them on a personal side and they're aware of your operation, so they're willing to look at a guaranteed loan program. Check with them. I think commercial lenders are more and more trying to work with their local customers in the area. So definitely check with them. The guaranteed loans are funded by those lenders. They're often used to continue customers who have experienced setbacks. To qualify for the FSA guaranteed loan program, an applicant must meet the general eligibility requirements. We must be unable to obtain the loan without a guarantee and have a feasible plan and adequate collateral as determined by the lender. So once again, the loan limit for the guaranteed loan program is updated annually, and currently it's $2,037,000. Our down payment loan program. So the applicants must be a beginning farmer, veteran, or SDA, or socially disadvantaged farmer. You have to provide a 5% down payment. You as the applicant, down payment loan funds may be used only to partially finance the purchase of a family farm. FSA can loan up to 45% of that purchase price, or the appraised value of $667, which would be a maximum loan amount of $300,150. So the balance of the purchase price is not covered by the down payment loan, and the loan applicant's down payment may be financed by a private lender, a cooperative, or the seller. So the heirs property relending program is going on. I don't know if there's anybody in our local area. I don't know for sure where all of our listeners are coming from, but this is also a program to help resolve ownership issues on farmland with multiple owners and resolve succession issues on farmland as well. So eligible uses of funds. To buy out fractional interest held in tenancy is common by heirs or in jointly owned property, and to pay costs associated with developing and implementing a succession plan. So that goes over FSA and our loan programs. Are there any specific questions on any of the programs that I went over? And there is my contact information.
Thanks, Erin, for that. So we could take questions in a couple of ways. You can type it into the chat box through everybody. And if you look at the bottom of your screen, you could see the small chat icon. Or you can type them in directly to myself or Ashley Dunker. She's our Alaska Sea Grant Program and Event Coordinator. And we can read them out loud anonymously for you. Or feel free to unmute and ask questions. I will go ahead and kick us off. I do have a couple of questions written down. So think about your questions and you can go next. My first question is have you been involved with any mariculture farmers here in Alaska already? Do any farmers have this loans from USDA Farm Service?
Yes, so we certainly do have some loans from oyster producers. I believe that falls under your mariculture.
Yep.
So yes, we have certainly had borrowers and successful borrowers that have graduated that have used our loan program. So yes, we have. And not only, I guess I can kind of expand on that a little bit. Not only have mariculture producers used our loan program, but they've also used another one of our programs called the Reimbursement Transportation Cost Program. So it's a partial reimbursement for the high transportation costs that us Alaskans or Alaskan producers face. So we definitely have participation in that program as well. And one other thing I could mention too, I can also send to Missy some fact sheets on not only our farm loan program, but also maybe this reimbursement transportation cost program fact sheet. For anybody that is interested, they can contact you. Does that work, Missy?
Yeah, that'd be great. And we're happy to put those on our website as well on the event page for this.
Perfect.
All right, we have one question in the chat box. For loan eligibility, how do you demonstrate that you've been unable to get a loan elsewhere?
So a few different ways. If you have had someone, or if you have contacted a bank and they have denied you, a denial letter works. We're not asking always for specific that type. If we get your application and go through it and it looks like your credit or your whole farm operating plan looks very hefty, we feel that you would be able to, with, I guess, go with commercial lending because of their rates and terms. We would ask you to go and contact them. Then they would turn around and say, no, that you're not eligible. I guess a little bit, I mean, if you've had a conversation with them as well, and they've kind of gone over what their eligibility criteria are, and it does not line up with your operation or your farm plan, then letting us know kind of what that criteria is that did not work out for you as well.
Thank you. Again, feel free to unmute if you have a question or type it into the chat box. I'll go ahead and ask another question. So there's a lot of startup mariculture farms in Alaska right now, and so it's difficult for individuals to have 3 years of experience already on a farm, a mariculture farm. I'm wondering if that experience can come from either working on a land-based farm, kind of a traditional land-based farm, or commercial fishing, if those experiences count.
Yep. So for the farm ownership loan program, yes, having those 3 years. There are some things that you could do to replace or substitute one of those 3 years. So then we're only looking at 2 years. Some of the things that can substitute for the 1 year is having an ag degree, owning, operating your own business. I think E5 or higher in military service, and a few other things that kind of go along those lines. So then we're looking back then at if you meet one of those substitutions, and we're looking at the 2 years. Yes, if you have land-based farming, then that can certainly be something. If you're responsible for management, the key word there is management. So not necessarily just being a laborer, but actually being responsible and having some managerial responsibility. Part of it, though, is also going to depend on maybe the loan request amount. If you're requesting a really large loan request amount, having a higher level or really feeling or filling that 2 years of managerial ability is probably going to be something the loan officer is really going to look towards, versus if you're looking for, say, only $50,000. We really want to support those beginning farmers getting started. And so having less managerial ability, but being able then to find a mentor to help you establish and continue forward and building up that operation.
Thank you. Okay, we have a question in the chat box. Do tribally owned farms qualify?
So that can certainly be an applicant, yes.
Okay, another one. Could you please expand a bit more about the transportation cost reimbursement program?
Yes, absolutely. The acronym for that is RTCP, which is our Reimbursement Transportation Cost Program. It's specifically designed for geographically disadvantaged producers, which means Alaska is one of those. That application process or program year runs on our fiscal year basis. So any expenses or shipping expenses that you have incurred over the course of a year, which runs October 1st through September 30th, can be submitted for a partial reimbursement. If it's a direct shipping cost, we take that amount and it goes into the formula. If it's based off of expenses purchased locally, then we're deriving out a shipping portion from that say the retailers are already tacking onto that expense, even if you purchase them locally or if you purchase them out of state. It can be used for the purchase of supplies, fuel, your oyster seed, perhaps. So seed, fertilizer, soil amendments, those aren't necessarily applicable to mariculture per se. Let's see, shipping costs. So all of those expenses are then turned into, oh, thanks for that link there, Melissa, yes. And that would be for our fact sheet, so that's great. So it runs off of the fiscal year, like I had said, October 1st. So this coming application period would be October 1st, 2022, running through September 30th, 2023. We usually start accepting those applications in the middle of the summer, around mid-July through the first part of September. And then we ask for all those copies of receipts by the first part of November. So that's kind of how that program runs. Payment for that then it usually is not till late spring, early summer, the following spring. I hope that answered some more of that question for you, Evie.
And I did put a link to the USDA fact sheet in the chat box if anyone wants further information, and we'll put this fact sheet on our website as well. All right, looks like Evie's question was answered. I have another question, so I'll ask one more and then I'll leave it open for a minute to see if anybody else would like to unmute, or feel free to type into the chat box while I ask my question, and then after that, we'll probably call it a wrap. So my question is on a repayment timeline. For shellfish farmers in particular, it may take a couple of years for them to have a sizable product that can go to market. So what is the turnaround for repayment?
So that's something that we would definitely work with the borrower on. Perhaps the first few years we're making interest only payments, but then that also does mean though at the end or closer to the last 2 years of that loan, we're making larger payments because we're including all of the balance on it. But the first few years we can definitely work with you and make interest only payments. Just kind of depends on how the operating plan works.
Right. Anyone else would like to ask a question? Again, feel free to unmute yourself and ask.
Could you share more about the mentorship in terms of like what that means for this and how you find a mentor?
Yeah, so we don't actually have anything really specific or I guess firmed up, I guess, or solid. So you can find if you have a mentor in the local area that does the same type of operation. I can make this kind of broader because I know you guys are more buy down mariculture only. Say if we have a new producer that was looking that had farming experience growing vegetables, but he's turning around and doing livestock. Him finding a livestock mentor, somebody that is versed in, say, this borrower is looking at doing farmers markets versus big commercial type sales. Finding somebody in that farmers market niche that they're looking at to really help them with the ups and downs or flows of how that type of operation works. So then kind of moving that over to mariculture, finding somebody that works with oysters or kelp or the same type of sales market that you're looking at sending your product to. So it's not anything specific. We may be able to help you, but you can certainly, if you feel like you have found somebody that's been through or is currently working the same type of operation that you are, that would definitely count towards mentorship.
All right, thank you, Erin. And we have another question in the chat box. What about city and I'll say or borough-owned farms? Are they eligible for these loans?
So that would be something, I don't know for sure. That might be something more we can discuss offline, but it's more because it has to be a family farmed owned, a family farmed farm. That's one of our eligibility criteria.
All right, thank you. All right, last chance for questions. Well, thank you so much, Erin, for taking the time to be with us today and share this information. Everyone here can, what are the loan limits? Got a last final question.
Okay. Yep. So loan limits, as far as the term, so the farm ownership loan, we can term out up to 40 years. With the micro loan, it would only be, oh no, I forgot. I think it was only 25 years. If it's an operating loan, we can only go out up to 7 years. But a lot of it's going to also depend on the useful life of that collateral. So for instance, and I don't have as many examples from agriculture sites, so I'm sorry, but like if we're doing like a high tunnel, maybe a high tunnel some of them don't have a useful life of 7 years. Maybe they only have a 4-year useful life. So we can only turn those loans out up to like 4 years. I mean, that's an extreme example, but that's kind of how that is. Interest rates currently, I think it was 5.125% for operating and 5% for farm ownership. And they definitely are increasing over the last couple of months. And they do change. Well, they are reassessed on a monthly basis. That doesn't necessarily mean that they change every month, but they can change every month. So that loan interest rate is determined at the time of either loan approval or loan closing. So for instance, if your loan was approved in December, but we had to do an appraisal and we then could not maybe close that loan until January, you can choose which of those interest rates. If it happened to go up, you can choose December. If it went down, you can choose January, just as an example. Yes, mariculture does include oysters.
All right. Well, thank you, Erin, again for your time. We're going to close it out with that. You can see Erin's contact information here on the slide. We will also have her contact information slides, this fact sheet that I shared, and a recording of the webinar on our Sea Grant page, alaskaseagrant.com, and go to the events page and go there to sign up for our next presentation. I hope everyone has a fantastic day.